See this recording. I got a few suggestions or a few people asking me to do a trade recap for today. So I'm going to break down what I saw, my pre-market game plan, my confirmations, and everything that got me into the trade. So before I even get into the pre-market plan, what I want to show is it's very important to zoom out. So if you go to any time frame, higher time frame, 30-minute hourly chart, it's very clear that the market is in balance. So what I mean by balance is every time the market moves down, it gets bought up. Every time you move up, it gets sold. You can see sold here, sold here, sold here, sold here, sold here, and then guess what? Sold here again. Every time we come into this 19 key level, it gets bought, gets bought, gets bought, gets bought. You can see this is a very common pattern. A lot of traders say you can't trade in ranges and just wait for it to break out. I disagree. I think the best trades could come inside of this range, but you have to know how to trade these ranges. So the first rule that I have, not a rule, but this is a guideline I follow in these type of ranges, is do not trade in no man's land. What I mean by no man's land is in the middle of the range. Around here, I personally do not want to trade the chop here, here, here. Okay, so like no man's land is just in the middle of the range. The best, rule number 2, the best and most high probability setups occur at the extremes. That's rule number 2. The extremes, I mean the extreme ends of the range. So if the market's in a balanced range, like, it's being stupid. Okay, let me just remove this text. Those are 2 rules right there. If the market's in a balanced range like this, the extremes would be here, point A and point B. Rule 3, these are basic rules of any market auction. Rule number 3 is you do not want to be longing breakouts near a range balance high, or vice versa, shorting breakdowns near/at balance range lows. This will keep you out of a lot of positions that could be avoided. What I mean by that is, like, a lot of traders, what they'll do is they don't realize the market's imbalanced. They don't adapt. They don't look at the conditions, and they'll just mark out a low. Like, they'll mark out this low, and then they chase it short under here. You can see every time the market's breaking a low, there's lacking follow through. Like, for example, here, mark out a low, you short under the low, you get destroyed. Same thing to the upside. Traders mark out a high, they buy it above the high. Another 2 highs here. This is what happened today. People just look at a 5-minute chart and they see the market rallying up. They see a straight shot up in the first 5 minutes. And this is what their charts look like. All they see is this, 2 big green candles. This is essentially what happens. And they mark out a swing high, like overnight high, or they'll mark out this high, and then they see a breakout and they'll chase it. And they're literally just providing liquidity for people to sell on the other side. Like traders like me, I'm using that context to take the opposite side, because when those buyers are hitting the offer, that's where larger sellers tend to sit, because there's enough liquidity for sellers to get filled and the market to move down. So I wanted to just break down the higher time frame context. I gave 3 rules, and I said you don't want to trade no man's land. The highest probability trades occur at the extremes, and the rule of thumb is you want to sell the extremes. You want to sell the highs of it and buy the lows. So fast forward, you could see market opens up in the middle of the range. This is where I'll get into my pre-market plan. So I covered a good amount of that context there. Let's just get into the Discord. Alright. Discord. Pre-market plan. This is a trading view visual. I said despite 3 trading sessions, the S&P has moved in a 48-point range. So it's very unusual for 3 trading sessions for the market to move in a 48-point range, which coincides perfectly with what I said about this balance range. I said volatility is low, volume is low, balance rules apply, which is all the rules I just shared above. Each time price gets near the 5549, sellers step in. Each time price dips under Friday's low into the 13s, buyers step in, and it works until it doesn't. We'll be watching the extremes, as well as continuation moves out of balance. And there's also a final rule is if we have a high or a low of a balanced range, the rule of thumb is you want to take it once it's successful above or below, meaning you don't want to be that first buyer who buys it above and then it just fails. But like if we consolidate and we build value outside of a range like this, usually is a bullish sign for continuation. And there's way more rules I could share, like briefly, like something like this happening, but I don't want to get too, I don't want it to get too complicated. So that 4-9 level for me, how this formed, it was a supply imbalance. If you want to learn supply and demand, how to draw them, just go check out Carmine's course on Invest Trade. I'm not here to say how to draw zones or to sell his strategy, but the strategy I use, as well as 5549, came from a level on the market profile. This is a market profile here. I use this sometimes to gauge levels. Let me just zoom out here. Market profile. This 4-9 came from this value area high of this 24-day, which is technically a balance high. You can look at it. You can see here, it's the value area high. So the market's opening inside of value. The same thing I talk about in balance, value area high. There's value, and then there's highs and lows of value. So it's just, this is time here. This is volume. If you want market profile resources, hit me up on Instagram at dailytrades, DALYTRADES, and I'll send you some free articles and other information you can use to learn how to read this. This might look like a foreign language to you, but besides that, this triggered for me here. Like I said, my key level for today was this 5549 to 58. We're opening inside of value. If we see a move into this area where buyers can become trapped, sellers step in. I want to look for ways to play short, targeting 4-2s. So now look at this. Now I'll get into the intraday commentary and what the market looks like as we're coming into this level. So I'll just pull up a 1-minute chart, and exactly what I said before validated here. So let's just mark out a high. Let's mark out a few highs. Let's mark out this swing high here at 4-9. Let's mark out this high here. Mainly this high. This is the yesterday's high day. This is what I mean by a lot of people just mark out highs and they just tend to buy above a high with no context and all this, especially like newer traders. Market makers know this. So you can see overnight market dips down into the lower extremity, holds, and we dilly-dally inside the middle of the range and no man's land here. Market opens up. You'll see a very strong opening drive here on ES, and this is that prior high I marked. And I'm going to spoil it really quick what happens, but guess what happens? Let me just get into what I saw here on the tape that told me to take the market short. But I showed you guys my pre-market plan. Let me just get back into it here. Okay, that 4-9. I said if buyers can become trapped and sellers step in, I want to play short. Without yapping, I'm going to just try and get right into it. So, let's see here. Today, it's all in real time, by the way. So we're coming up near the upper high. I was watching the VIX and the NASDAQ. Pretty strong buying out the gate. 934, it's normally short-lived. What I mean by that is if the market opens up, I'm going to load the replay feature so I could show you guys also in real time what it looked like. I don't know why that was yesterday's. But if the market opens up and there's very strong buying in the first like 5 minutes, I learned from my mentor Carmine that's usually a bullish indication for continuation for a scalp or for the market to move higher. But for me, I found that's usually a trap and it's usually short-lived. It's already at 934. There's red flags going off, and there's nothing much to see here. I mean, I didn't catch this in real time, but there's actually what I call an unfinished auction here, which usually gets revisited. I didn't catch that, so I'm not going to go into that. Again, if you want to learn about this stuff, I could send you articles, but I'm trying to keep it kind of simple. You can see an offer here, but nothing really sticking out. 940, I take my first trade. So let's see if Bookmap can load up. So I could show you guys the replay feature of what I saw on the tape. Hopefully it's saved, because I'd be fairly pissed, I'm not going to lie, if it did not save. please, brother. Let's just let that do its thing. Okay, yesterday. It can't be true. It should have saved. That's disappointing. Anyways, that sucks. I said that I saw some selling activity at this 5.552, which is inside of that 4.8 level I showed you to 5.8. Remember the higher time frame context? I'm seeing selling on the tape. What I mean by this is as the market came up, you'll see it here. It's best to watch the tape in real time. It's hard to see after the fact, but if you're watching the tape in real time, look at all these green bubbles, which mean they're green at offer trades. Look at the volume here. There's tons of buying coming into this 5.552, 5.553 inside of a supply zone to the upside, and the market was struggling to move higher. I saw this as weakness. I saw this as there was a seller sitting on the other side absorbing all the buying. And like I said, going back to the context of buyers buying a high break here at 5.2s. Look, you could see it literally through the tape. People buying the high, and if the market moves down, they will be offsides, and they're gonna have to cover their position. So let's see if this works. So I can show you guys how it looked in real time. But right there, I took the market short. I did not hesitate. I saw confirmation. There is some selling here, and I take a loss on this trade. So let's pop it up. It's my area of interest. Market moves up. It looks like this. I take it short. Here, I was risking 1.25 points on this trade with an entry at 5.2. I was targeting 4.2s. So think about that. I was risking 1.25 points to potentially make 10. And where I actually got out on my second trade, the winning trade, 11, 12 points. So that one stopped out. I have nothing to say about this trade. I mean, this is just one of those trades where you miss time it and you just have to re-enter. I mean, my thesis was still correct. Just because I stopped out does not mean I'm going to throw out the position or throw out my analysis, because, like I said, I just mistimed the market. It could still work. I saw some selling there. I had to take a stab, and I stopped out above this high. Risking about 1.25 to make 11. It didn't work out, which is cool, because the risk is so small. I mean, I was risking 1.25 points. And if this doesn't load this time, then I'm sorry, I just can't show the tape. Yeah, it's not going to load. This has never happened to me. Cool. All right. So this is unfortunate. So I take a loss on that one. Seeing some selling here at 5.552. Look at the high there. 5.552. So I just mistimed it. The market just ended up wanting to break the highs one more time. And then, you know, at this point, I'm still in the trade. I didn't stop out yet. And I said really validated under this 4.9. Why I thought this position could work out if we got back under 4.9, because 4.9 was yesterday's high. So a major edge that a lot of people don't realize is you could put yourself in the position of other participants. I learned this from my mentor, Carmine, too, where it's, let's say you're buying this breakout above 4.9 and you're longing this thing. I like to put my I like to put myself in the participant's shoes, basically, of what I mean by that is envision yourself, just like visualize yourself trading massive size and you're buying a breakout above 5.9. Imagine you got filled on ES at 5.550, so you one lot of ES at 5.550. If you're buying a breakout, market starts to move down under 4.9, you're going to be in trouble, right? Because you're buying a breakout above yesterday's high. So I knew if we got back under it, this would validate that the sellers here are strong and buyers would have to stop out. And so I said we really want to get back under those 4.9s. Let's see. Really want to get back under those 4.9s. Market never ended up getting back under those 4.9s. So you can see here, this is where I got short. We sold off. I was in profit for a little bit. But then we dipped down into the 4.9s, and this didn't look good, I won't lie. I saw some signs of buying. We dipped down, bid steps in, we hold the 4.9s. Obviously not ideal, but my risk was so small. I had such a good entry. I was cool, just chilling in that trade, holding it. So I was in that trade. And this one ends up stopping me out, like I said. Cool. Move on. I didn't put my head down. and market comes back up into 5.2. Okay, and I stop out here, and what you're gonna see is, look, right where I stop out, look at this buying that comes into this high. Hold up. Let's see. Look at this. We break above a high. This is where I got short. We broke the high, super strong buying, and then we peak our head above and get back under the high day. That, in my opinion, was a clear sign of weakness. So, again, seeing some selling at the high. They're still selling at these 5.2s. Back in this thing short, 9:47 a.m. This is time stamped. I got short at 9:47 a.m. off the selling at the 5.2s. Let me show you 9:47 a.m. Market looks like this. Market looks like this. I'm short. I'm seeing selling at this high inside of my supply and balance. My stop was above this high day. All right, so my stop was above that high day, meaning I was only risking 2.5 points on this one. So I was risking 2.5 points. This is what it looks like on TradeZella. Short 9:46, right? I had to type it out, so it was a little bit after I said, obviously. But I got short, right, 9:46, literally this 1 minute candle right here. And you can see this thing just melts off of that. We get back under the 4.9s. This trade works out immediately. You can see here. This was what, a 5-minute trade? About 8 minutes, something like that. But I'm going to show you guys what I saw. If you stay long enough, I'll try and pull up a footprint so you guys can see in real time what it looked like. But saw selling. I like the signs of selling developing here at the high of day. Still developing at these 5.2s. I want to see a move back under yesterday's high, 4.9, very important, or the move down will be short-lived. That's what I mean when peak its head above, fail, boom, move down. They tried to hold the 4.9s, but once unsuccessful, it was over. I mean, those buyers are trapped. They have to sell. They become sellers because they have to hit the bid to get out their longs. Market fuels a move down into 4.2, and then I said low days at 3.9. So I was targeting 4.2s from my plan that I told you guys about, but I didn't sell at my target because the selling was very, very aggressive. So I felt comfortable holding this position longer than that to capitalize on a further move to the downside, just because how weak the market was. As I said here, I'm going to press this into low a day. Look at how aggressive the selling is off this. Low a day is at 3.9. May press into low a day. And I said I'm pressing it. I'm out here at the 40s. Could have been a little more patient. So, right, market looks like this. Super aggressive selling. I was watching the tape. I mean, this was very heavy selling. So I felt comfortable holding it for a little extra points. You could see market ends up breaking that low a day. From the high to the low, it was a massive move. 5.4 to 3.6s. And you can see we broke the low a day. And I got out around the 40s right here. Now, one thing I do believe I could have done better is my exit. So on this trade, actually, I sold it a little bit before I would have liked to in an ideal world, because I said I was going to hold it into the low a day, but I got a little bit fearful, I won't lie. I just wanted to lock in this, and we already over a point below my target. But in reality, nothing was telling me to get out where I did, and the right choice would have been holding it into the low a day. But I'm not upset because I still pressed it past my target, which gave me a better R multiple. You could see I planned 4R, but I realized 4.6 because I held it past my target because of how strong the selling was. And this trade I was risking 2.5 points to make 11.75 points. So those were my trades for the day. I'm going to try and pull up a footprint visual for you guys so you guys could see the action that I saw at the 5.2s. Let me just detach this. Let's see here. Nice. Pull it up here. Alright, this is a bonus for anyone who stayed long enough to see this shit. Let's replay. This is the nice thing about Sierra. I mean, look at this. I could literally just go back and replay it for you guys. 627. That is not correct. Is it? 2024 and 9:30. So you're going to see all the stuff I mentioned, from the strong buying at the open to the weakness at the high day. This is market open here. So let's speed it up a bit so we're not here all day. You're going to see how strong this buying was right off the bat, excuse me. Fuck. Let me just draw out my area where I saw the selling. Rectangle, where is it? Yeah, Sierra gets complicated sometimes because there's so much shit here. Alright. Move it up. Alright, 4.8 to 5.8 area I was watching from pre-market plan. Alright, look at this. Should be right there. Yeah, it is. I see super strong buying at the open. Okay. Now I'm going to slow it down. Look at this. Market's coming up into my supply. Watch the tape at the 5.2s. You're going to see a trail of trap buyers at the high. This already looked weak. I did not take this because my level was at 4.9, but the selling was already starting right there. You saw that right there. Then look at this. 5.2. You're going to see we break this high. Look, we're breaking a high. You see how fast this tape spread up? Just hold on. Look at this. You see this? We're breaking above a high a day. Look at this. You see that? We broke above a high a day. You see all the buying above that didn't move higher at these 5.2s. I see that as selling activity on the tape. For that to get filled, someone has to be selling into that. For there to be a buy order, there has to be a seller order on the other side, on the offer. This is hitting the offer. That does not make much sense unless there's a seller there. And we moved down. That was where I took my first trade. I got short immediately. My stop was above the high. I'm seeing some selling. This is in my area of interest. You're going to see we come back up and break the high again. Even more strong buying, and that's the second trade I took. So fast forward. We never get under the 4.9s. This is where I said we need to get under the 4.9s. Okay, look. Slow it down. Look at this. Market breaks the high again. You saw that? New high days are getting put in here on the ES. Look at all this buying coming into the high. I mean, come on. Look at this. Look, we break the high right here. Look, you see that? Back under 5.2s. Once we get back under 5.2s, I took the market short. Look, we broke the high again. 306 lots on 330 total volume. Then we get back under 5.2s. I got in short here. My stop was above the high. I said, okay, let's get back under 4.9. I knew if we could get back under 4.9, these buyers that are trapped would be off sides. And look at the reaction under 4.9s. You'll see the selling. This is why I held it past my target. Look at this. Look at the tape speed. Look at the aggressive selling. Look at this. Massive sell sweep here. Look at this. It's moving so violently. I held it past here. And eventually we broke the low. And there was even buying at the low. Look, that was sus too. We broke the low. Super aggressive selling, didn't move lower, and there was some bids at the 40s. But yeah, that was it for today. That was everything. Just wanted to add that in for anyone who wanted to see the tape, stay a little longer, and that's my trading recap for the day.